Hello, financial enthusiasts and aviation aficionados. Welcome back to the Investing Iguana channel, where we navigate the complex world of investments with ease and insight. I'm Iggy, your host on this journey to financial enlightenment. Today, we're taking off with a compelling analysis of SIA Engineering, a titan in the aviation maintenance sector. With a recent buy rating at a target price of $2.70, you might wonder, what's fueling this optimistic outlook? Buckle up as we dive into the engines of SIA Engineering's financials and market dynamics, breaking down why this stock might just be your portfolio's next high flyer. SIA Engineering's financial flight path. SIA Engineering, a major player in the aviation industry, has recently released its financial results for the third quarter of the fiscal year 2024. The company reported a net profit of 27 million Singapore dollars, which is a remarkable increase of 110% compared to the same period in the previous year. This significant growth in profit is a testament to the company's strong performance and effective strategies. However, it's important to note that this figure fell slightly short of the projected expectations. The reason behind this was unexpected foreign exchange losses, which amounted to 3.9 million Singapore dollars. These losses are often the result of fluctuations in currency exchange rates, which can impact the financial performance of companies involved in international business. Despite this minor setback, SIA Engineering's revenue saw a robust increase. The company's revenue rose by 40% year-on-year, reaching 292 million Singapore dollars. This figure is not only impressive but also indicates a return to growth, as it is approximately 9% higher than the pre-COVID levels recorded between the fiscal years 2015 and 2019. The growth trajectory of SIA Engineering is largely driven by the resurgence of air traffic at Changi Airport. As one of the busiest and most connected airports in the world, the increase in air traffic volume at Changi Airport has a direct impact on the demand for SIA Engineering services. This resurgence signals a positive outlook for the company's revenue in the near term, suggesting clear skies ahead for SIA Engineering's financial flight path. Navigating through economic headwinds. While SIA Engineering is flying high in terms of financial performance, it's important to note that there are still challenges that could potentially affect its course. One of these challenges is the persistent pressure on staff costs, which continues to be a significant factor affecting the company's profitability. Despite these headwinds, SIA Engineering is preparing for a promising future. The company is expecting a 24% growth in earnings per share in the fiscal year 2025. This growth is expected to be driven by a strong demand for maintenance, repair, and overhaul (MRO) services, as well as increasing profits from associates. CIMB, a leading banking group, remains optimistic about SIA Engineering's prospects. They have maintained an ad rating for the company, with a target price of $2.70. This suggests that the current valuation, which is 17 times the projected earnings for the calendar year 2025, represents a good opportunity for investors. This valuation is just below the average level before the pandemic, indicating that it could be a decent entry point for those looking to invest in the company. In summary, while SIA Engineering is navigating through some economic headwinds, the outlook remains positive. The company's strong performance and promising growth projections, coupled with a favorable rating from CIMB, suggest that it is well positioned to continue its upward trajectory. A closer look at the hangar. Taking a closer look at the operational aspects of SIA Engineering, it becomes clear that the company's robust revenue performance in the third quarter of the fiscal year 2024 was likely driven by a revival in both the airframe and engine maintenance segments. As flight activities at Changi Airport have returned to nearly pre-pandemic levels, SIA Engineering has been actively engaged on the tarmac. The company has been handling an increased volume of commercial flight arrivals, which has kept their services in high demand. This increase in activity is not just a reflection of the current state of affairs, but also a promising sign for the future. The resurgence in flight activities indicates a recovery in the aviation industry, which directly impacts the demand for SIA Engineering services. As more flights are operating, the need for maintenance, repair, and overhaul services also increases. This uptick in activity is a positive sign for the company's service demand moving forward, suggesting that SIA Engineering is well positioned to capitalize on this trend. The future of flight maintenance. As we look towards the future of flight maintenance, SIA Engineering appears to be well positioned to reap the benefits of increasing profits from its associates, especially from Eagle Services Asia, a company in which it holds a 49% stake. Eagle Services Asia has recently begun the induction of geared turbofan engines, aligning itself with the broader industry trend of moving towards more efficient, next-generation aircraft engines. However, the journey ahead is not without its challenges. Elevated staff costs pose a significant headwind that the company will need to navigate. These costs can impact the company's profitability and need to be managed effectively. Fortunately, SIA Engineering has been proactive in addressing this issue. The company has embarked on a journey of digitalization and has been making concerted efforts to improve productivity. These initiatives are expected to help mitigate some of the cost pressures associated with staff costs. In essence, while there are challenges on the horizon, SIA Engineering's strategic initiatives and alignment with industry trends put it in a strong position to maintain its financial altitude. The company's future in flight maintenance looks promising, with the potential for steady growth and continued success. Investing Iguana's take. As we circle back to the hangar, CIMB's analysis paints a picture of a resilient SIA Engineering, poised for growth amidst the industry's recovery. The call to add with a target price of $2.70 reflects confidence in the company's ability to navigate the evolving aviation landscape, supported by a robust rebound in MRO demand and strategic investments in next-gen engine maintenance. If you're intrigued by the prospects of SIA Engineering and considering adding it to your investment fleet, remember to conduct your due diligence and keep an eye on the industry's headwinds and tailwinds. And that, dear investors, brings us to the end of our exploratory flight over SIA Engineering's financial landscape. With its engines revving up for a potential earnings ascent and a buy rating shining like a beacon on its runway, it's clear why this stock is taking off on analysts' radar. If today's analysis has sparked your interest or fueled your investment strategy, don't forget to like this video and hit subscribe. Join us at Investing Iguana for more clear-eyed financial analysis and investment tips. Have any thoughts, questions, or insights on SIA Engineering or the aviation sector? Drop a comment below. Let's keep the conversation soaring. Until next time, keep your investment smart, your portfolio diversified, and your eyes on the skies of opportunity. Thanks for watching, and see you on the next flight.